and welcome back to Copenhagen FinTech Lab. Hopefully we still have Michael and now also joined by Bobby here for a discussion on Latin America and why the future of FinTech might be found in Latin America. Just checking in here, Bobby, Michael, you're with me?
Michael is here.
Fantastic. Hi, Bobby.
Hi, Thomas. Hi, Michael.
Hi. So I'm just going to do a brief intro here. So Bobby is a co-founder and managing partner at IDC Ventures, a seasoned tech investor and a pioneer in the international money transfer and payments technology industry. Michael, some of you might already have met, but for those of you that weren't in the previous session, Michael is a managing partner at the Latin American Investment Office, IDC, co-founder of IDC Ventures. And Michael also, in addition to that, have 20 years of international experience as a C-level management, board member, investor, and business angel across several industries on 3 continents. So with us today, we actually have 2 very experienced gentlemen. And you look so young, even though you're so experienced. And such an amazing CV. Guys, I will hand the mic over to you.
That goes for you, Bobby. I think that was a long one. I feel old.
It's great to be here, Michael. Thomas, thank you for having me.
Yeah, likewise. And thank you for getting up early, Bobby. I know you're sitting on the other continent, so thank you for getting up early. But I don't know, Bobby, before hitting, the discussion that we're going to have, it might be worthwhile that we kick off a bit about why a European tech fund with LATAM roots and why actually Denmark. I don't know if you want to throw the curveball to start with.
Yeah, happy to. From our side, we wanted to be in Europe because that's where we believe most of the fintech innovation is happening, especially in terms of B2C. There's many reasons for that, but one of it is friendlier and more progressive regulation than you see in the US. And in Asia, you see sort of a completely different ecosystem. Then when thinking about Denmark specifically, our partners and roots and old business relationships took us to the Nordics and specifically Denmark. We met some fantastic people. Regulation there for funds and for startups is progressive also and very beneficial to funds that want to kickstart and get going and cover all of Europe or even further. And then because of things like this event, sort of the progressive nature of where the industry is, where the whole ecosystem is, and how strong of a foothold Denmark can be for Europe, but also for more of using Denmark and Europe to bridge to Latin America, which is a lot of our background, and bridging again those B2C technologies that we're seeing on this side of the world. And that we've seen, for the period we've been in Europe, which is now, a good 4 or 5 years.
Yeah. And actually, before you and I are hooking up, Denmark came your way through a number of entrepreneurs with a global vision, moving beyond the borders of Denmark and actually being engaged also with one of our investment trade shifts. Took us to Denmark as well. I think it's kind of the convergence. And I think there's a reason to that as well by Denmark. And that's also recognized in the fact that the tech environment up here is really on the forefront. And also in terms of the fintech, a number of major companies and major players in the industry have been produced in Scandinavia, not only Denmark, but Sweden as well over the past years. So it's a natural place with the strong fintech focus we have to be. Obviously, we cannot leave out London and other places in the world, but kind of that. But it might be though. Yeah.
I'm sorry, Michael, interrupt. The case in point is the recent news on Klarna you might have seen. I mean, biggest fintech now out of Europe. So
that is great. Yeah, that's interesting. Actually, on the talks we had, that is creating another competition because there's another set of newcomers on the market which hasn't really reached that level yet, but they're aiming high, and Klarna is setting the bar at this point. So I think you would see like less than a handful probably, but some of these newcomers trying to reach the same levels over the coming years. But again, back to Latin America. As you know, as Thomas said in the introduction, you were an entrepreneur yourself with a long history. But why do you think that LATAM is actually becoming one of the hottest markets for tech and fintech today? I mean, what is behind it? You have Latin roots, but international background. What is producing this?
So I think it's two big factors. One is that in Latin America, cash is still king, very much beyond what many of us can imagine. So the big enemy is still the inefficient, expensive cash that is hard to control, hard to manage, hard to move around, and doesn't really provide significant insight. There's no traceability is so low, information availability is so low. So with economies in LATAM being still mostly cash driven, I think that's the big opportunity. Of course, what makes the opportunity real is the penetration of connectivity. Of course, 3G is now widespread, and I know that sounds like nothing in Europe, but for Latin America, getting to fully widespread 3G, a lot of 4G now laid out. It means people everywhere can be connected, and with the low cost and adoption of smartphones, that really enables an ecosystem where we can go tackle the cash problem and give people much more efficient, real-time, instant solutions that fintech can enable. I think on the side, aside of that, countries and especially governments have been really good at being progressive and learning about pro-consumer and pro-fintech regulation. So you've got countries like Mexico, Colombia, Brazil specifically that have done really well in following what Europe's been doing, some of what Asia did to enable competition for financial services companies, to enable a more level playing field for new technologies, and all regulators in Latin America, especially in those three countries, have really pushed the boundaries, pushed their traditional banking systems to open up, pushed for, again, a fair playing field that is enabling new fintechs, technology companies to come in and really try to serve those 70-80% of the population that are underserved in financial services.
Mm-hmm. So actually, the governments in those three countries have played a major role in providing the legal framework to enable this tech rise. Talking about attracting a legal framework and attracting foreign investors. I mean, you had in your own startup years back in Blue Kite. It might be that you can just briefly give us a story about it, but you were able to attract some of the major San Francisco investors to the continent, to Guatemala actually. Could you just give a few words on that, on the Blue Kite, and how you persuaded them to go there? But it must have been pretty exotic for them back in the day, though.
It definitely was. And so I am from Guatemala, so of course it had a special part of my journey and our fintech to be able to bridge, again, Guatemala and the US and try to bring prominent fintechs down south. But briefly, when we were going at it 9-10 years ago, fintech was still an early thing. And for Latin America specifically, funding was about 1/40th of what it is today. So it was very early. It started really with US companies providing cross-border services to Latin America, more so than services in Latin America. So I quickly had to move to the US and ended up providing a service for Latinos in the US. So it was, again, a US service, but that benefited both Latinos in the US and then Latinos outside of the US in their native countries. And I think that was the first wave of fintech that really was able to get things going. It wasn't making things more efficient locally, but making things at least more efficient for remittances and payments and things coming from the US, a market that was more ready to be digitized and taken to fintech. So we were a little bit in that bridge of being a US company in the US, but servicing Latin America. And we found sort of the right investors in the US with prominent blue chip names, including the Sequoias of the world that had already started a vision for digital money transfer for a company called Xoom, XOOM. And Xoom was really the pioneer in digital money transfer. We were a small subset of that. And we were able to sort of figure out that we had a similar vision for what we could do to make cross-border payments more efficient, especially for Latin America, and that we could do it together. And as you said, the first conversations were a bit exotic. Then we finally were able to bring them to Guatemala, where we had sort of a fantastic little tech hub. And that fortunately grew into a good merger where we today have 300 people developing software for Zoom, which eventually we sold to PayPal. So PayPal has a strong foothold in Guatemala thanks to that journey. But as you said, it was exotic for sure back then. It's still somewhat exotic for sure. At least now, funding and startups and sort of activity is 30, 40 times higher than it was 9 years ago. But that's also true for many places in the world, right? As fintech has really become a thing in the last 5-7 years.
I think it's really an interesting aspect, actually, Bobby. The thing with bringing so many people, I think it's probably 2/3 of the Zoom team, which is sitting in. Is that right? Half, 2/3 of the Zoom team sitting.
At some point, it was almost 2/3. Today, it's half of the Zoom team. Yeah, so we were able to build a structure where half of the team is in the Bay Area and half of the team is in Guatemala, and it's again developing software. The call center is separate, and it's actually not in Guatemala, unfortunately. But
I think
developing.
Sorry, I think it's a pretty interesting perspective because we're talking a lot about financial inclusion and also the social impact. And one thing is making a good fintech, making it profitable, and making good investments there. But I think it's an amazing story if we talk about the legacy that a company like Blue Kite actually left in Guatemala, because you lived in San Francisco yourself. You could have left and had the whole thing established outside Guatemala, but you actually persuaded them to go down there. And the legacy that is leaving the country is literally having 300 top-notch engineers sitting there doing software, pushing the development of that local cluster, and hence pushing the development of Guatemala as towards a more digitized and more modern economy. So I think apart from it being a great tech story and a great fintech, it also has this great social aspect, which is way beyond what we normally look at as investors. And I'm happy they're still there, although you left it to be with us, honestly.
Thank you, Michael. Yeah, it's been a great journey, and it really helped for us. The service was, again, for Latinos in both countries, and to be able to have employees and people in both jurisdictions created a much greater empathy for the customer and for the problems we were trying to solve, and the problems the company is still solving. So it's been a great journey, and I think there's many more examples like that to come.
With your contacts in the Valley and in San Francisco, the Bay Area and all, do you feel that over the years that LATAM has become closer, less exotic and closer to these guys? I mean, in terms of understanding what is going on and being willing to bet there?
Most definitely. So I think it's not only been the US, but I think the push from Asia has been tremendous, as we've seen in the Asian mobile money ecosystems, the WeChats of the world and the Alipays of the world. Now really the evolution of everything money, everything financial being on your mobile has really sort of taken over Asia and been tremendously successful. We've seen similar in Africa, but we've seen Latin America sort of drag and be slower to that change with similar market dynamics. So I think that, bringing in those newer technologies to Latin American markets that need it has been a tremendous push as well. So the opportunity is there, connectivity is there, people have smartphones. We've seen proven success cases in Africa and Asia of how successful mobile wallets and mobile money ecosystems can be. And so as of the last, I would say, 5, 6, 7 years, adoption has started in Latin America, even though slower than it was in the other continents and countries. And that is really starting to gain support from investors everywhere, including the US. Now you're starting to see prominent names, numerous unicorns, newly listed IPOs in Brazil, and now hopefully soon in Mexico for fintechs. So the ecosystem is really starting to move.
And you're getting in. Yeah, sorry.
No, it's just I have a couple of questions here from the audience. Is it okay to take it now?
Yes,
Go ahead, Thomas.
All right. We have Andrea Cage that is asking, where are the next trends that will drive fintech growth in LATAM? Societal, tech, government. So there's a trend question for you guys.
I'll jump in if you want, Michael. To me, it's everything payments related. So making payments really cheap and accessible. For example, I don't know if you know, in Europe, interchange fees for simple card transactions are really inexpensive or becoming less and less expensive. In the US, they are more expensive, and Latin America, even more expensive. So for a regular small merchant to accept a card, they're easily paying 5% on that transaction, which makes it impossible to go widespread. So I think payments technology to make all payments using digital or card methods really, inexpensive will be important and will drive the adoption of these payment methods. I think another big place, and I think Michael talked about it, is health tech and insurtech. Mm-hmm. There's a lot going on in our countries in terms of digitizing processes, digitizing the entire sort of cycle around insurance, and how to make it again less expensive so that it can go out to more of the masses. And on top of that, I would say the third big trend would be on lending. So lending to consumers, because now again people are more digitized, more data that fintechs can process to lend, and more ways for fintechs to be able to capture money after it's been lent and so forth. But I think even more so on the business side, with much more of the supply chains going digital, of commerce going digital, again of insurtech and health tech and fintech, many more transactions going digital. It really opens up an opportunity for a big over-the-top sort of digital factoring play. Mm-hmm. Factoring is still very much a paperful process, inefficient, little access to it all over the region. And now with, again, much more digitized commerce, we think there's a huge opportunity for sort of business-to-business factoring, small and medium business factoring in all digital processes, with much more healthy real-time information to make decisions on.
And on top of that, there was an element of the public sector as well, government in the question. And I think there's a greater push for transparency in general throughout Latin America. The governments are not as strong as they are in Northern Europe. So much of the services that are provided are private-public partnerships. But a digitization of these processes, of course, spells efficiency and it spells transparency. And I think there's a greater push for transparency and more democratic open processes in general over the coming years. This is more a medium-term thing, but I can see that progressive political blocs are already talking about the digitization as a way of dealing with a more open state apparatus and public administration, and we'd definitely see that. And I think some of the ways to sneak it in is actually like the Osico case I briefly mentioned, where you have digitization of the public health sector, and through that you create that transparency and efficiency, but you're doing it in a private-public partnership with the benefits for both sides.
Great. Super. Actually, there's another question here that I'm just reading for you now from Andrea also, starting with, being honest, what are the forces that are keeping LATAM behind? If the region could do one thing now, what might you recommend leaders to do to accelerate progress? That's a big question.
I mean, it's a big question. I think, there's a historical reason for Latin America being behind, but there's also like one of the answers to why it's accelerating now behind it. As I recall one of the earlier talks that I listened in on, they were talking about government support to innovation, government support to this and that. In Latin America, you don't have that force. So anything that happens in Latin America has to come out of itself. But when it comes out, it stands as its own. It's much stronger, and it's a bit the same thing with the technology here. The technology companies coming up, they really have a justification in the market, and they have a concept going forth. I think, the greatest thing here is actually, I think, building the bridges. If I could say put one thing in as a major element, attracting these tech companies to the continent, because again, it leaves a legacy. You have another mentality coming into the economy. You have another push in the economy, and you leave new competences in the company that in the country which can pull it out. Of course, you need social reforms on top of all of that, but there's not one single answer to it. But yeah, it's kind of my take on it.
Jump in with, especially at least for fintech in that context, being more open and progressive, as you said, staying on that track, and try to go for a much more transparent ecosystem, which many of the countries are already starting to put in place. I think that's critical. Having the willingness to fight the oligopolies that exist all over Latin America and stifle innovation, stifle competition. With regulation, if you can really flatten the playing field and make the rules of the game clear and eliminate, make it more transparent, eliminate corruption and cheating, I think we could accelerate a lot more.
So, and sorry, Michael, I just have one last question here from actually the guys in the lab here watching. And that is, many of the Danish fintechs here in the lab, they are looking towards the typical journey of scale is like Denmark, the Nordics, UK, US, or maybe now they're beginning to look towards Asia, right? And I guess there's actually two questions here from the guys. That is like one, how would you, or why should you look as a Nordic fintech? In what areas should you look to scale into Latin? And what would be your best advice for companies, if they are starting to kind of choose Latin as the first choice, how to enter that market?
I think starting with the latter, one of the major issues here is actually getting connected to the right people. The know-who and the know-how is really important here. And this is kind of the hypothesis behind the fund and also behind the overall initiative we have in building the bridge is that we can actually bridge European investments to Latin America, creating these joint ventures, partnerships, or what is it, what have you. There's many models, connecting the right people through us or with us. That's one way to go. But you definitely need to find a platform or a partner where you can team up with who knows the way around and is within within that area. I don't know, to the first question, Bobby, where to start. I think it depends on what you're having, because sometimes it could be easier to go in through one of the smaller, Central America, instead of going head on in Brazil, which is fairly complicated to begin with. But I think it depends. I don't know if you have any take on that, Bobby.
I would just agree that you want to go, especially Latin America, you want to navigate with the right people, with the right partners. You want to find somebody that can really help you navigate locally. It's often not always what it seems. You have to scratch the surface to understand the real story of why things work the way they do in each ecosystem, in each how rules are applied per country and so forth. So partnership definitely, and then I would really look at, again, if you start small, as Michael said, some of the Central American countries that can really help start a foothold inexpensively and build up from there. That's one option. And if you go to one of the big countries, say Brazil, Mexico, or Colombia, then really look at which one is playing more towards your sort of side of the field in terms of regulatory progress, in terms of what the rules of the game are, how they're leveling the playing field. I think that's critical. And then last, Brazil is, something important to consider when you look at Latin America is Brazil is sort of the crown jewel, you could say, of Latin America. It's the biggest economy by far, most progressive in that sense, but it's also the hardest to get into. And it's also the least like the other countries in Latin America. So you could very much win Brazil and not have a lot of synergy with Latin America. It depends on what your angles are, depends on how you come in. That's less of a case if you come into Mexico and then want to come to Colombia. Much more similar environments, obviously cultures, language, and so forth. So that's also something to consider if you want to go after Brazil. How much leverage does that give you in the other countries? If you go after Argentina, Mexico, then maybe it's easier to navigate the rest of Latin America, but harder to then make the jump to Brazil.
Great. Thank you so much. Unfortunately, we are out of time. I feel like we could talk for another hour, and it's super interesting. And I think we definitely need to figure out a way to bridge the Nordics to LATAM a lot more than we have been looking into so far. So we'll definitely be in touch. And glad to hear, Michael, that you're also in Denmark now.
Thank you.
So you're very close.
Thank you, Thomas. Thank you, Michael.
Well, I'll see you soon, Thomas.
Thank you very much.
See you, Bobby. Yeah, ciao, guys.